Maintaining price stability is our main goal, so we have to take the appropriate decisions in order to ensure price stability over the medium term. Of course, we are looking also at financial stability at the international financial markets, but we came to the conclusion that it is the right decision to continue to tighten monetary policy also this time.
You've guided to further interest rate hikes. Is there anything that could happen that would derail you from further interest rate hikes?
Well, if the outlook would be very different, immediately very different, suddenly very different, that could have an impact. But we see still the economic outlook that is more or less the same, even improved a little bit compared to what we had in December. And we had a higher inflationary pressure this time than 3 months ago. So the right answer to that was also to continue to tighten monetary policy.
How would you characterize the state of the banking crisis right now in Switzerland? Is the banking crisis over?
Well, we had this incident last week with Credit Suisse. So the government took measures, we took measures, FINMA took the measures, and now we have the takeover. So it's extremely important that the takeover of Credit Suisse by UBS will be finalized smoothly. We have no doubts, and the commitment is very big by both players that will go smoothly, and we are supporting it by our liquidity measures.
Now, why was the decision taken to wipe out the debt holders of AT1?
Well, I cannot comment on that. This is in the responsibility of our financial market authority, FINMA.
But even so, the law was changed a couple of days after the SNB came out with the Emergency Liquidity Assistance Program. That was the catalyst for a change in the wording. Could it have potentially been politically motivated because some shareholders were insisting on some form of a payout?
No, I really cannot comment on that. But I think it was very important that we had a solution by the end of the weekend in order to make sure that financial stability in Switzerland is maintained and also globally by having this solution.
Some European bank analysts are saying that as a consequence of this decision of the weekend, bank funding costs are going to go up within Switzerland because there's now an extra risk associated with issuing AT1 debt. How do you view that as the central bank of this economy?
Well, we will see whether this is true or not. I believe it will have limited impact and people will understand why this decision was taken. I cannot comment on it, but I think over time we will not have longer term consequences of that.
People are concerned about the risk that the SNB are taking on, indeed, with the ELA Plus operation. 100 billion worth of assistance, up to 100 billion worth of assistance is being provided, but with no collateral in return. Does that not put the balance sheet in a potentially dangerous situation?
Well, it was absolutely necessary that we can provide the liquidity under those circumstances in order to make sure that also now the takeover can take place, that Credit Suisse has enough liquidity during that time. Of course, it's a little bit of special arrangements, but instead of traditional collateral, we have now this preferred treatment of the Swiss National Bank in a bankruptcy case, which is equivalent to having collateral. So I think it's a little bit different from what we do usually, but again, with the sufficient protection for us.
Given the extent of the involvement of the weekend and the fact that the Swiss government, the regulators and the SNB all had to come together to push this deal forwards, is there a concern that perhaps Switzerland may be losing its safe haven status as a currency?
I don't see that really. So the Swiss franc is still a very important currency. It is also, we have very low inflation, we have a stable environment. So I believe that the Swiss franc will remain a very relevant currency and also in the future.
And speaking about the Swiss franc, there are two elements to how you think about monetary tightening. One, of course, is interest rate policy, and the other is the appreciation of the Swiss franc. And how do you see that panning out in terms of your balance sheets?
Well, our main instrument is the short-term money market rate, so our S&P policy rate. So we adjust monetary policy by adjusting this interest rate. And of course, we have a second instrument. We can buy and sell foreign currency. And we explained that before, that during the last quarter of last year, we sold foreign currency in order to support our tightening of monetary policy. We do not have any aim to reduce our balance sheet, but we can use the sales of foreign exchange in order to maintain appropriate monetary conditions.